Today, I'm joined by E3 Metals Corp boss Chris Doornbos for RGN's latest episode of Interviews in Lockdown. So, Chris, what impact has the COVID-19 pandemic had on the pace of this global green revolution that's being talked about? And why is that good news for a company like E3 Metals?
I think that the COVID pandemic, as sad as it has been, has highlighted some, interesting and, strain on sort of the globalization that we've had and the reliance. And I think you've seen a couple of things happen. One is a bit of an effort to deglobalize supply chains. We've seen that in Canada and in coordination with the United States as well on critical minerals, which is where we fall. It's definitely been something that is been highlighted, and both countries are adamant about developing their own internal supply chains for critical minerals, lithium obviously being one of them. The global green revolution, I think also in 2020, and I'm not sure that this relative was a result of the global pandemic, but more it was already on the tracks, and with people focusing on it. But 2020 definitely saw the solidification of the electric vehicle, just with a lot of the OEMs committing to percentages of their fleets becoming electric. And even in Canada, we're seeing manufacturing facilities being developed in the next 3 to 4 years by the major companies, Ford and GM, to manufacture electric vehicles locally in Canada, which is great news for the country, but also it's just demonstrating what's happening in the space globally. And we're seeing that here as well. So, and the other side of this is that the lithium-ion battery has also solidified itself as the lithium battery or the lithium-ion battery, the two solidified themselves as the power source of choice for mobility. So when you're looking at cars or looking at everything from power tools to scooters to phones and computers, lithium batteries are going to be the technology. So for us specifically, that's very good news, obviously on both fronts, because the market for lithium-ion batteries is generally driven by a large part from the electric vehicle market, as well as solidifying itself for the lithium-ion battery. Us having a lithium project here in Alberta means security of supply, security of demand as we build security of supply into the future.
And your business proposition that you have, being located in the heart of Alberta's historic oil sector, how much of that is a microcosm of this global process of decarbonisation?
Yeah, I think we in Alberta, where our industry and on a GDP basis is the majority is hydrocarbon based, and the industry is built here to support that. So obviously with decreasing oil prices and oil going negative has had a huge impact on the local economy, and it's forcing when oil is when there's a good price for oil, the province does very well financially, both for individuals within the province as well as the province itself. And with the sort of sustained downturn, you might say, in the oil industry, the province is actively looking to diversify. The benefit that we have specifically to our project is that diversification is a very minor little step, because we produce lithium here locally, just like you would produce oil and gas from an operational standpoint. Mm-hmm. So that means that all of the service companies and expertise that are underutilized right now because of the downturn, we can employ. And all of the expertise we need to build the project is here locally as well, which means we're not going very far. There's a very well-developed social license, both in the community as well as with the government, and permitting for projects like this. So, that will be at our advantage in terms of a de-risk as we grow this project towards production.
Mm. And talking about recent progress at the project, how pleased were you with the findings of the PEA for the Clearwater project? particularly, those nitty gritty figures into, MPV, CapEx, OpEx, those things?
Yeah, I mean, we've published a preliminary economic assessment recently on the project. It is at a first step for the company at the economics, but the work that's gone in behind it is very detailed. We have a lot of information about this aquifer. It's been producing, a part of it has been producing oil since the 40s. It was discovered originally by ExxonMobil. So we have a lot of history about production. So we understand it pretty intimately. So that part of the economics is actually fairly well defined, and to the point where we've actually spec'd the drill string that we would put down for the production wells. We spec'd the pump, the actual pump that we would use. So there's still work to do. Obviously, we're going to upgrade them to measured and indicated in the aquifer over the course of the next 12 to 18 months. And that takes production testing in the aquifer itself. But we have a lot of detail on that. So the costs in the PA are actually fairly well defined. They do use our technology as well, which is a very low energy intensity process. And then the process flow sheet also outlines us producing a lithium hydroxide at battery grade. So we went to that direction. The reason for that is that a hurdle for other projects can be power. If you want to go hydroxide, generally it's a power consuming and quite a large power consumption. So we're able to, with the access to natural gas in the province at a very good price, we're able to generate very inexpensive electricity. So we're able to power the project because the majority, 5 to 98% of our energy consumption is electricity on the project. The benefit to doing it this way is that we have the ability to go to zero carbon emissions. And the way that we do that is that we will be generating our own power with our own gas-fired power plant. We'll also be putting a large amount of brine back into the aquifer because we don't have a tailing stream. We produce the water, we take the lithium out, we put it back into the aquifer directly. That gives us a source to dispose our CO2. So we can actually take the CO2 out of the exhaust gas of the power plant, and we can put it into the waste stream and back into the aquifer and dispose of it. So having net zero carbon emissions is a very important part of our project, and a goal. I think it's going to be a very important factor for any mineral company, mining company in the future. We have the ability to do it, just the simplicity of our operation, not having like trucks and shovels driving around or big evaporation ponds. The ability for us is there to do it quite simply, so we plan to.
And just looking long term, how can the company really capture the project's full scale up potential within this Leduc reservoir?
Yeah, I mean, the PEA outlined a project that was 20,000 tons per year for 20 years. So that was just a snapshot. It's a very small snapshot of what this aquifer can deliver and what the project delivered. That project at 20,000 tons for 20 years delivered a net present value after tax of $820 million US, with an operating cost of about $3,650 per ton US of lithium hydroxide produced. So on the bottom quartile of operating costs, which is very important for to withstand and be resilient with price fluctuations, but also generates a lot of revenue with that lower operating cost. That's just 20,000 tons. So the company can scale. This is the Clearwater project area. If you want to go to our website and check that out, that project can likely scale. And the intent is to do that once we get 20,000 tons into production, to scale it to 50,000 tons. And there we also have two other project areas that we believe can also scale to around that 50,000 ton mark. Each of those projects has a mine life of 35 years at 50,000 tons. So 150,000 tons of production at 35 years. That's just the resources we hold. We also have a bunch of ground that we haven't put resources over. So there's a huge opportunity for us once we get this first 20,000 in production, demonstrate a process flow sheet that works commercially. Really the sky's the limit for us to expand across the aquifer in Alberta, producing lithium and become a major supplier of lithium hydroxide to the market. Yes,
of course. Now, from the technology side of things, what level of internal brainpower has gone into the development of E3's own direct lithium extraction technology, which, you know, combines existing processes to create this hydroxide product from brine.
You know, we developed what we call DLE, or direct lithium extraction process, ourselves. You know, we've had help along the way. We were working with Livent for a while. There's a development facility in Kingston, Ontario that we were working with, Green Centre Canada. So they've been very instrumental in helping us get to the point where we're at now. But that is retained within E3 Metals. So we have our own expertise, our own technical team that has been developing that. We're actually just about to cut the ribbon on a Calgary facility locally to us, where we will start the design of the pilot itself here in 2021. So, and that's just a week away. So, and that's combining all of our expertise that we have in the company into this facility. And so, yeah, I mean, it's a very important part of what we have. We're one of the few technology development companies, so DLE technology development companies, that also owns its own resource. So that we're not shopping for clients or customers, although that is a part of the business that we look to expand upon in the future. The goal for us is to produce our own lithium hydroxide. That's where the value is, and to use our technology to do that. And so, you know, it's a big piece of what we've done, and brings, I think, a lot of value to the company, having that in-house and 100% owned by E3.
Yes, definitely. And so, aside from the imminent pilot plant, what are the other key focus areas for the company in 2021? I know there's a pre-feasibility study in the offing as well.
Yeah, so, you know, the piloting our proprietary technology is obviously priority one for us, and demonstrating that on sort of a scaled down but still commercial representative level, right? So representing what this would operate like commercially in just a smaller unit. So that's priority one. Upgrading our resources to measured indicated is obviously another big piece of what we're doing. It's a fairly inexpensive job for us because a lot of the wells are already existing, so we're not doing any drilling. We're just going to go to existing infrastructure and do the testing we need to do. So the costs of that are pretty minimal, and it's a plan for, you know, 2021, 2022 as we march towards pre-fees. And then the last piece is obviously like the process flow sheet. The DLE technology is an important part of it, but it's just one part of it. Producing lithium hydroxide is where the value will be, especially at battery quality. So another goal for 2021 is to finalize that flow sheet development and start actually producing on a regular basis hydroxide from the concentrate that we make every day in the lab. So we'll start making hydroxide. You know, that would be a big moment for the company, having the ability to do that at that scale, right? Because we have made hydroxide before, but I think, you know, producing it at the scale that we want to this year means that we can start shipping it to potential clients, potential customers of E3. So battery manufacturers, cathode manufacturing companies, to have them start to look at it and, you know, evaluate the product, as well as E3 as a potential supplier to their supply chain. And for us, obviously being aiming for a zero carbon product, I think that's a large part of it, you know, of that, of retaining like an offtake contract with a major battery manufacturer.
Yes. Now, finally, how well timed do you think E3's entrance into the market is? You know, we're looking at the mid-2020s when demand for lithium chemicals is set to take off in tandem with EV sales.
Yeah, I think it's critical. I think the timing is critical. And, you know, for our goal is to be producing our product, you know, mid 2020s, so 2024 to 2025, have that first 20,000 stream in line, and then go immediately to start expanding that, taking the team that developed that first 20,000 and having them develop the next, you know, 20 to 30,000. Timing for everything. Timing is everything for anything that you work on, right? And I think that, you know, E3 has sort of gone through all the hard yards now with this project over the past 3 to 4 years, and now we're at the point where we're really just marching it towards a commercial operation. And, you know, that the demand is going to come on, from what we're seeing, stronger than supply, especially initially. And so to be able to, and that's, everyone's talking about that happening around the price parity for the EV, and we're talking like the mass, you know, mass market EV, not the you know, like a Tesla 3 and Audi A4, likely the same price today, comparable models, but there's no mass car that does 300 miles that is a price comparison, and they're expecting that to be 2024 to 2025. So that really, then you're going to start to see the demand move very strongly, and supply just does not move as quickly as that demand can move. So, you know, that generates a very strong market for the product, and I think that that is actually time for our project to get into production and secure, you know, some very good contracts, and then, you know, grow the company from there to expand our production to meet market demand as it also accelerates.
Indeed. Chris, thanks for joining us today for the latest episode of Interviews in Lockdown.
Excellent. Thank you very much for your time.